Well, hello, everyone. Thank you for joining us today. I am really excited to present you with one of the Coalition's newest programs. First of all, let me introduce myself. My name is Lyon Cruz. I'm president of the Coalition. Like I said, I'm very excited to present the newest program with the Coalition from a vendor called Benere. This is the Coalition's program for accident, critical illness, and hospital indemnity insurance. Benere is a great program. We have
You're on mute, Lyon.
I apologize, everyone. Benere's been a great asset for the Coalition. They are a very transparent and cost-saving company. When you think about accidents, critical illness, hospital indemnity, think about an Aflac type program. The problem that I've always had with Aflac and the rest of those other programs like Aflac is you really couldn't tell what your cost was. You couldn't tell what the commissions were. With Benere, we found a partner that is truly transparent and has the campuses benefit, has the campuses at the foremost of their program. Today we have with us Joe Sadik, National Director, and also Mike Schaller, Chief Operating Officer from Benere. And without further ado, one note before that, we ask you that you mute your microphones to stop all the background noise. And we also ask that if you have questions along the way, that you use the chat feature at the bottom of the page. We will monitor that chat feature, answer questions as we go, or save them to the end, whichever is most appropriate. So without further ado, I will turn it over to Joe. Thank you, Joe.
Yeah, thanks, Lyon. Appreciate everyone jumping on. We're excited to kind of give you a high-level overview of the captive, what the value that we're able to drive towards the university, and not only the university, but also the employees, and what we're addressing in the marketplace. And then Mike, if you want to do a quick intro, and I'll jump right in.
Sure. Nice to be on the call today and talk through the value prop with you. My name is Mike Schaller from joined Benere about 3 years ago. Prior to that, I was a vice president of benefits for 23 years at a large healthcare system here in Northwest Ohio. Really just have to be on the call today and talk about the experiences with Benere. Thanks.
Awesome. Thanks, Mike. So just a quick background on Benere. Again, we're a group captive solution for supplemental benefits, accident, critical illness, hospital indemnity. And we'll kind of dive right into how the marketplace works today, the issues that Benere is addressing, and the value we're going to drive back to the university. We started in 2018. We're domestically domiciled in the state of Arizona. We're regulated just as any other insurance company is. The DOI of Arizona is our boss. So we went to market in 2019 with about 35,000 employees in the captive. And then as you can see from the screen, currently we're at over 500,000. And then by 1/1 of 24, we'll be well over 1 million employees in the captive, representing 90 plus employers. So we've grown quickly, and kind of as we go through this, again, as Lyon mentioned, use the chat feature for any questions. We'll address those at the end. These are the three core coverages that we offer inside the captive today. It's accident insurance, critical illness, hospital indemnity. Give a high-level overview of what those coverages are in case any of you on the webinar are unfamiliar. But these are supplemental coverages. There's no correlation to the core medical. These are 99% of the time employee paid coverages to help supplement the core medical, really for those in the high deductible plans. So accident coverage is going to pay a lump sum directly to the employee based upon an event that happened, whether it's concussion, stitches, broken ankle, anything like that, whether it's your child happening in a sporting event. That money is getting paid directly from the carrier to the employee. Critical illness covers really those those major life events, heart attacks, strokes, cancer. And that's usually a $10,000, $20,000, $30,000 policy that's going straight to the employees. And then lastly, hospital indemnity. Biggest claim here is maternity. So when you and your spouse are going in to deliver a baby, you're getting paid for just being admitted in the hospital and then on a per diem basis. Also, you know, if you have accident coverage and hospital indemnity, you're going to get paid out on both if the event requires a hospitalization as well. So just again, a high level overview of what these coverages are. And then Mike, if you kind of wouldn't mind talking a little bit about why most employers are offering these coverages today.
Yeah, I will. Thanks, Joe. So what we recognize with Benere is these coverages are extremely important, especially as you see the high deductible health plans really start to be a majority of the plan offerings that employers offer. But when you have your average deductibles, both family and single, continue to increase, we recognize that these coverages are really a safety net for the employees. The unfortunate thing is they've just been inappropriately financed over the years, with the value that the employer receives very low compared to what the industry keeps every year. So this basically again just solidifies why these coverages are important for your employees.
So really, these are the two, and Mike touched on this somewhat, these are the two problems going on in today's market. These programs are very low loss ratios, and there's little to no financial transparency, as Lion mentioned in his intro. So there's a reason there's about 70 carriers out there in the marketplace today who offer these coverages. These are the cash cow for the carriers. And because of that, and because of the optics that are going on behind the scenes where employees aren't filing claims, you can think of it almost as a mail-in rebate. You know, you go to Best Buy, you get your television, you purchase the warranty. A couple years later, it breaks. You forget that you had the warranty. You don't know how to file a claim. And that warranty becomes pure profit for the industry. In a similar regard, these coverages, they have low loss ratios. So it's just very high profits for the insurance company, which leads to no transparency. Because when you're making quite a bit off the employees, the carrier is not going to be transparent and upfront with you on what that looks like. So these are the two issues that Benere is addressing. And in this slide, this is a good example of what of an analysis that we did for a current client before they came on. This was $2 million of premium per year. The loss ratio was 25%, meaning 25 cents on the dollar was going to pay claims for the employees. Everything else was broker commissions and carrier retention. So if, you know, as the fiduciary, as HR, the CFO of universities, this isn't the value prop you want to be seeing for your employees. Obviously, more needs to go back to them. They're the ones paying for these coverages. So Benere wanted to take this model, flip it upside down, be fully transparent where every single dollar is going. And then really whatever's not paid out in claims, if we can keep that in-house and return that back to the fiduciary, the HR, CFO of the university, to then reinvest those dollars in the employees. That's what the goal of the program was, and all while increasing the employee benefit and decreasing the premium over the incumbent in-force carrier. So this is really how the group captive model works. As if anyone here offers the coverages today, say the Colonial, Aflac, MetLife, Unum products, this is still a fully insured product through and through, just like it is today in your current situation. Voya Financial is our fronting partner. So this is Voya's paper. Voya handles all the customer service, claims adjudication. Everything that your carrier does in today's world is what Voya would do tomorrow. This is still going to be payroll deducted on your admin platform. And Benere reinsures 100% of the risk. And then again, at the end of the year, whatever is not paid out in claims, 100% of that is returned back to the health and welfare fund of each employer, each university, to reinvest those dollars in the employees. So from a schematic standpoint, again, this is going to be, from the employee standpoint, nothing changes. It's payroll deducted. It doesn't matter what admin platform you're using today, whether it's Business Solver, Empyrean, PlanSource, ADP, Workday, they're all perfectly fine. It's going to be payroll deducted. Voya is going to handle the claims management, customer service, underwriting. All the employees are going to see is Voya facing products. The captive doesn't have any interaction with the employees. We're purely behind the scenes. We're the financing vehicle. We're the mechanism of transparency and the mechanism to get the distributions back to the health and welfare fund. And then whatever broker or consultant that you're currently using is who you can use tomorrow. Benere is not a broker, so we will work with whatever current consultant you have to roll this program out. So nothing needs to change from your current relationship if that's what you'd like. We have plenty of partners if you're looking for a consultant or want to change that we've worked with that we can help provide. But if you're happy in your current situation, nothing needs to change there. Right of center is the optics that change behind the scenes in the captive. So on a funds withheld basis, Voya is going to cede the premiums to Benere, the group captive. All that means is Voya controls all the dollars throughout the entire year until all the claims are paid. Benere provides 100% reinsurance of the premium, and the program's split into a 60-40 financial arrangement. So we have 40% fixed cost to run the entire program, 10% commission to your consultant or broker, 20% to Voya, 5% to Benere, 2% to premium tax, and then 3% to our captive manager, who is Strategic Risk Solutions, also includes audit fees. And SRS is the largest independently held captive manager in the country. So that's your 40%. Nobody gets a penny more, a penny less than that. Again, fully transparent. That leaves 60 cents on the dollar to pay claims for all the 1 million employees that are in the captive today. So everyone that comes in is going to be underwritten to a target loss ratio of 50%. That's how it's filed in 41 out of the 50 states. There's no cookie cutter plan designs. These are all fully customizable, which is another great benefit of the captive. A lot of times, if you go out to the market and you have these products that are off the shelf, they're the same plan designs that many other employers also have. So we can tailor make these programs to help relate back to your medical plans if you have certain plan designs that you want to see at specific amounts. So again, fully customizable, but all target 50% loss ratio, all based upon your census and plan designs. So in a perfect world, at the end of the year, this is a group captive. We're taking the aggregate experience of all the employers in the captive. If we hit a 50% loss ratio, that leaves 10 cents left over. We had 60 cents available to pay claims. We paid 50 cents out in claims. That 10% then is what represents the distribution for the year. That'll go back on a pro rata amount, right back to the health and welfare fund of each university at the end of quarter 1 the following year, and then those dollars can be used to reinvest in the employees. So in terms of risk, what does it look like if an employer wants to join from a risk standpoint? There's no entry fee, no letters of credit needed, unlike many medical stop loss captives where that is a huge component. There's capitalization needed. There's none of that with Benere. There's no exit penalty. You can leave at any point in time if you desire. We do have 100% retention since day 1, which is important to note. But there's nothing stopping any university or employer from leaving the captive. There's also 0% downside risk to any of the employers. So in the event that we hit an 80% loss ratio for the year, say claims run really hot that year, we exceeded the amount that we had available for claims. It's Benere's core capital that's at risk. We have to true up the captive. So the worst case scenario for any employer in the captive is there's no distribution for the year because we paid it all out in claims, but the employees still went on the front end in terms of better plans and lower pricing. Because to allow access into the captive, we have to look at your current plan designs and make sure we increase every benefit item for the employees and decrease the pricing over what they have, which we've been able to do in every case so far. And really that's because we're stripping all the fat out of these programs, being fully transparent, and we're able to improve the value prop for the employees. And then on top of that, return those unused dollars rather than being retained by the carrier. We can get them back to the university to reinvest in the employees.
I think the other important feature here is really to talk about Voya in itself as well, because from an employee experience front facing, they're going to interact with Voya all day, every day, from a service, claims adjudication. Benere is strictly the financing tool behind the scenes. A lot of people say, well, why Voya? Why are they the only carrier? Voya has actually been very proactive in the market as well, as far as getting employees to file claims, using technology to do that. They've really been on the forefront of utilization of that. There's a couple examples I'll talk about. One, from a claims processing perspective, is called intuitive claims processing. So when you have an accident claim today, let's say you break your leg, you'll go to the ER, you might have an x-ray, you might have follow-up physical therapy, physician follow-up visits. Today in the industry, the way that works is every episode of care you have to go back and file a claim every single time. So it could be 4, 5, 6 different episodes, 4 or 5, 6 different episodes of claims processing. With Voya and their intuitive claims processing, they're going to anticipate what claims need to be paid out based on the first episode of care from an accident perspective and pay that out the first time. So that helps drive utilization from a loss ratio perspective, but it also really helps with the employee experience. And that's just one example of that. But really, the idea is we want to bring value and transparency to the market. So does Voya, and they're utilizing technology to help employees in that space around that. So,
thanks for bringing that up, Mike. A lot of times too, we get through part of the presentation, and I even think Lion mentioned this when we met with him many times, and it will come up as what's the catch? Why isn't everyone doing this? And really the biggest headwind that we've had since day one is broker compensation. Out in the marketplace today, if an employer wanted to go offer accident, critical illness, hospital indemnity through an Aflac, through a Colonial, you name the carrier, they're going to get, that broker could get paid up to 65% commission on year one premium. So if you have $1 million of premium and there's what the industry calls heaped commission, when they're making 65%, the captive's paying 10%. So there's a major conflict of interest between how many consultants look at this, between their paycheck versus what's best for the client, which is the captive. And a lot of consultants won't bring this to employers, which is why we partner directly with the coalition and Lion. The other big feature about partnering directly with the coalition is we've waived, typically our minimum before joining the coalition was 1,000 lives. So we weren't able to take any type of group that was lower than 1,000 lives, which ended up being, could be a lot of smaller universities in the various states. By partnering with the coalition, we've been able to waive all minimums. We're able to take in any size college. We have many different universities and colleges already in the program. I think the smallest one we have is around 200 lives today. And without the partnership with Lion and the coalition, we weren't able to do that. So because of the network and size of all the universities that roll into the coalition, we were able to allow access to all that. So I believe we have around 7 or 8 different universities today in there. Quite a few of them are coalition members. And again, we just rolled this out about 2 months ago, and completed the partnership with the coalition. So we're excited to really get going in the near future. Mike, from an employer standpoint on how most of our clients use the distributions, how you use the distributions when you're the head of benefits for ProMedica, can you speak a little bit to the different ways folks use the funds?
Yeah, so the distributions, I'll talk about the process first. The way the distributions come back is they come back at the end of Q1 following the plan year. So for example, the plan for plan year 2022, we paid that out in basically April of 2023. Last year, we returned about $6 million. That $6 million really would have represented pure profit for the carrier. But with Benere through the captive experience, you're able to return that to the employer group. So it gets returned basically end of the first quarter following the plan year. How do other employer groups utilize it? How did we utilize it when I was at ProMedica? We utilize it specifically to offset Ben admin costs, technology fees, and also business support tools with our technology, which really helps direct and guide employees to make the more appropriate plan decisions when they're going through open enrollment. But there's also some other ones in here you'll see. Communications technology is on the forefront. Wellness, specifically financial wellness and well-being. Care navigation's on the forefront of everybody's tongue. Any and all of those could be used for the distribution. One of the most, probably the most, I won't say the most, but one of the success stories that we had is we had a program that came in right before COVID hit. They did not have an employee assistance program, an EAP program. A year later, with the distribution, they were able to stand up an EAP program and help offset a majority of those costs. Another shift that we're seeing in the industry is we're starting to see people use this as a leverage tool to help people migrate out of a high deductible health plan. So what they do is they say, if you enroll in a high deductible health plan, we will give you critical illness insurance at no cost to you. So it's employer paid. So we're starting to see that transition in the marketplace as well. But really, it helps provide some more strategy back to HR, because we know that sometimes budgets are tight. And this is a new way to keep dollars in-house instead of letting the industry profit from your employees. So.
Yeah, thanks, Mike. Another interesting way you could use it is just to offset medical plan increases for the year, and that could really, that benefits all the employees. So a lot of different ways employers use it. And just to kind of go over a couple different case studies that I thought would be interesting. This was a group university with a little over 1,000 employees. Some of the major things that Voya does that Mike mentioned earlier is in these coverages and policies, there's a lot of got you language. So there's a lot of different language that the employee thinks that this is going to be a claim that they can file. They go to file the claim and they find out, well, no, sorry, there's all the fine print. Voya waives all of that. That's a huge reason why we wanted to partner with them. There's no gotcha language. So when the employees are in the situation where they can file the claim, that claim's getting paid. Again, we're dealing with large employers as well. And, the customer service experience, the member experience is everything. And we have no noise. I think that speaks to why we have 100% retention. But in this case, this university had a lot of pre-existing conditions that were not waived. So when they wanted to go use their hospital indemnity policy, and you and your spouse go in to give birth to the baby, and they want to submit a claim for hospital indemnity, that's not getting paid because they didn't waive pre-existing conditions for maternity, which is the largest claim filing for hospital indemnity. So again, carriers are putting this language in there that doesn't allow the employees to actually utilize it when it comes time to submit a claim. So in this instance, we waived all pre-existing conditions, and the hospital confinement benefits were added, which is really a per diem. So you're getting, for a maternity, you're in there usually 3 days. So you're getting paid $1,000. In this case, was their policy for being admitted, and then $100 per day. And then on top of that, we were able to return around $33,000 in total distributions back to them at the end of the year to then reinvest those dollars into their employees. So that was a really good case study. And this is another university on the largest side, around 6,000 employees. We were able to save, as Mike mentioned, a pretty large shift into the employer funding to try to help migrate the employees out of the PPO plan into the high deductible, which saves the employer funding there. And then on top of that, we were able to save them 50% of the employer funded portion of this coverage. So they offered base critical illness policies to help migrate those employees. And we were able to shave off 50% of those savings and save the employees about 22% on their premium. And over the course of 3 years, in regard to their distributions, and they're going into year 3, so this isn't quite done yet, but 650 to a little over $1 million in distribution. So there's just a lot of good benefits the captive can bring. You're going to get quarterly financial reports, if we didn't mention that. That way you'll see where every penny's going. What are the loss ratios for me as an individual university compared to the rest of the captive? You'll get that on a quarterly basis. Again, so you'll fully understand all the financials. In terms of entry, what does it look like if you're interested in looking at an analysis? And again, you've heard us probably overuse the word transparency, but what we'll do is we'll gather the data. We'll look at your current enforced policies if you offer them today, and we need a basic census. Date of birth, date of hire, zip and gender is all we need. Everything could be unidentifiable because we don't need any type of employee data. We'll take that along with your current enrollment and we'll map over, we'll create an analysis, show you exactly, here's what I have with Colonial, here's what I'm going to get with Voya and the captive, and get it down to the employee level, how many policies are enforced, where are those savings being derived from, and then give you captive projections based on your total premium. Here's what we're anticipating to give you back. We have returned no less than 20% of premium back every single year since existence. The most we've returned back is 25%. That was during COVID, where folks weren't going to the hospital. They were avoiding all their elective surgeries. They were canceling those appointments. So claims actually were suppressed. But we've averaged about a 40% loss ratio since inception. The delta between the loss ratio and 60 cents, as we discussed earlier, that delta is your distribution, which again, minimum we've returned back is 20%. So even as we're going through this, if you know the total premium that you have within your university, you could take 20% of that, and that is what you could conservatively expect as a distribution. On top of that, your employees are going to have reduced premium and increased plan designs as well. And with that, I'd like to open it up if there's any questions. I know a few came in here that I'll read now. But if you have any more, please type them in. First question was, do you have a minimum requirement for joining the captive? We actually answered that one earlier. There typically is a minimum requirement, but because of the deal and partnership with Lion and the Coalition, there is not a minimum requirement. So even if you come in and participation's low in these products, no issue. We're not going to kick anyone out of the captive. We'd be happy to have you join along with many other colleges that are in there today. Next question, are you able to join anytime or only during open enrollment? That's a great question. So there's really two ways to join the captive. One, during open enrollment. With a lot of universities, sometimes their open enrollment is they have an effective date of 7/1, so their open enrollment's in the spring, or if you have a fall open enrollment. Those are typically the most popular times to join, but we have several clients this year and every year join mid-year, and the benefit to a university for doing that is a couple-fold. One, you could do what we call a census takeover. So you offer these through Colonial today. You could join the captive come 3/1 if you wanted, and it'd be a pure census takeover. So whoever's enrolled in the Colonial products today are now just mapped into the Voya products. They'll have better plans, lower pricing. The benefit to the university is you start earning distributions the day you join. So if you joined March 1st, you would accrue March 1st to December 31st worth of distributions to be paid out at the end of Q1. So the university is jump starting their entire distribution cycle on top of getting the employees, that better plan and better pricing right away. So those are the two ways. Again, no entry fee, no exit penalty. You can come and go as you please. And then, Mike, there was a question that came in around implementation and just kind of describing what that looks like. Do you mind touching on that?
Yeah, as far as implementation goes, it's the carrier implementation. So what I mean by that, it's an implementation with Voya or through Voya. They will basically go line by line. There's a full implementation team. Timeline is from implementation is we need at least 60 days. We can sometimes do it shorter, but to make sure we're all still friends at the end, 60 days is what we would ask for. And like I said, Voya will be leading that implementation. As far as the previous 60 implementations we've been through with Voya, it's 5 out of 5 stars from a rating perspective at the end of that. So Voya does a great job of making sure everybody is connected and that there's a positive end or result at the end of that implementation. So,
thanks, Mike. And that takes about 60 days is really the process, give or take. So if we're able to get a 60-day notice from the time of implementation, from the time of open enrollment, that gives us more than enough time to to get everything up and ready on your Ben platform. 90 days would even be better, but most times we'll get about 60 days. The other question, what has the average dividend been for employers in higher education for the last few years? About 20% has been the minimum. 20 to 25% is what you can expect back. And then how does Voya compare to other carriers? What carriers are not A-rated? Mike answered a lot of that throughout, just some of the differences Voya is doing in the marketplace in terms of their intuitive claims processing. I don't know how many other carriers are not A-rated, but Voya is A-rated. And I believe that is all of the questions that have come in. So if there's not any other ones, I thank you for everyone's time.
Joe, this is Lyon. I think we have one more question that's come in.
Okay, yep. What is it?
Do you see you request gender in your census list? How is your organization working with gender fluidity?
Oh, wow, that's a great question. I have not been asked that one before. So yeah, in terms of the census, we need gender to underwrite hospital indemnity. Hospital indemnity is the biggest factor, is the larger the female population in the organization. That is a big factor when it comes to underwriting, especially those in the early 30s in the childbearing years. So in terms of Voya and how that's working with, that's a good question that I honestly don't know an answer to. I don't know if Mike, from an HR perspective, if you have any more details into that.
Yeah, we can accept the gender identity by what they identify with as well. We've seen that come over on the census already, so we're equipped to handle that.
All right, good. I'm glad you knew that one because I didn't. Mike dives into all the data and all of that, so I don't handle that piece. But I'm not sure who asked that question. Oh, Joanne, if you need more details around that, I'll get with Voya to provide additional details. But that's a good question. And I think with that is all the questions that were asked. So I appreciate everyone's time. If you'd like to learn more, we'll send out a follow-up email. We'd be happy to do an analysis for your university, show you exactly what the savings would look like, get it all on paper. That way you can make a decision that way. But I think if we're able to kind of show you what the plan design improvement for your employees would be, I think the value will speak for itself. And if you don't offer the coverages today, we'd be happy to show you, kind of talk through the value of why you should, why most universities do today, and then show you what those plan designs and then the captive projections would look like as well. Anything else, Mike or Lyon, you'd like to add?
I'd just like again to thank everyone for joining today. For those that joined us today and those that will hear this recording in the future. Thank Joe and Mike for their time and their expertise. I hope everyone sees what the coalition sees in this program, that the unique model, the transparency, the advantageous terms that Benere offers through their model. I hope you see the value that this presents for your employees. When I was CFO at a couple of small colleges, I was always frustrated that I didn't know just how much in commission the brokers were taking and how much the carriers were getting, especially in the voluntary products that we offered. Until I met Benere, I really didn't know. It was my spidey sense that they were taking a lot, and Benere just proved that they really were taking a lot. They don't. You don't get the Alabama coach for nothing. He makes a pretty good salary off those commercials. Even the duck makes a lot. So they got to get that money from somewhere. But through Benere, you can certainly offer your employees a much more valuable product. So with that, thank you all again for attending. And Joe and Mike, thank you. Please take advantage of Benere.
Thanks, Lyon. Have a good day, everyone.
All right. Bye-bye.